There's a pattern unfolding right now that hasn't been seen since the 1970s. Central banks around the world are buying gold at a pace that defies every modern economic theory. China, Russia, India, Turkey, Poland, they're not just buying, they're hoarding. In 2022, central banks purchased over 1,100 metric tons of gold, the highest amount in 55 years. In 2023, they bought even more, over 1,000 tons again. And in 2024, the buying has accelerated. But here's what makes this terrifying. They're not buying gold because they think it's a good investment. They're buying it because they know something is coming. A collapse so severe that paper currencies, including the dollar, will become worthless. And when that happens, the only thing that will matter is who holds the gold. This isn't about inflation hedging. This isn't about portfolio diversification. This is about survival. Nations are preparing for the end of the dollar's dominance, and they're doing it quietly, methodically, and desperately. Let me show you why central banks that spent 40 years selling gold are now buying it faster than at any point in modern history. Why China is hiding the true size of its gold reserves, and why the scramble for gold happening right now is the clearest signal that the global financial system is heading toward catastrophe. This is the story of the new gold war, and it's happening right now while most people aren't paying attention. To understand why central banks are panic buying gold in 2025, you need to understand what happened the last time this occurred, the 1970s. In 1971, President Nixon closed the gold window. For the first time in history, the dollar was backed by nothing but trust. No gold, no silver, no assets, just a promise from the government. This created what's called a pure fiat currency system. Every dollar in existence is backed only by confidence in the U.S. government's ability to manage its economy. At first, it seemed fine. The dollar remained the world's reserve currency. Global trade continued in dollars. Oil was priced in dollars, creating artificial demand for American currency. But there was a problem. Without gold backing, there was nothing to prevent the government from printing unlimited money, and they did. The Vietnam War, Great Society programs, and expanding government spending required more money than tax revenue provided, so they printed it. The result was the inflation crisis of the 1970s. By 1980, inflation hit 14%. The dollar lost half its purchasing power in a decade, and central banks around the world, which had been holding dollars as reserves, watched their wealth evaporate. They'd been promised that dollars were as good as gold, but when inflation destroyed the dollar's value, they realized they'd been holding paper that could be printed into worthlessness at any time. So they did the rational thing. They bought gold, massive amounts of it. Between 1971 and 1980, gold prices increased from $35 per ounce to $850 per ounce, a 24-fold increase. Central banks, particularly in Europe and the Middle East, converted their dollar reserves into physical gold. They stopped trusting paper promises and went back to the one asset that couldn't be printed, inflated, or defaulted on. But then something changed in the 1980s and 1990s. Paul Volcker, chairman of the Federal Reserve, crushed inflation by raising interest rates to 20%. The economy went into recession, but inflation was defeated. The dollar stabilized, and for the next 30 years, the dollar seemed invincible. It remains the world's reserve currency. Global trade expanded, and the financial system built around dollar dominance appeared permanent. During this period, central banks stopped buying gold. In fact, they started selling it. Between 1980 and 2008, central banks sold thousands of tons of gold. Why hold a non-yielding asset when you could hold dollar-denominated bonds that paid interest? Gold seemed like a relic. The financial world had moved beyond it. Modern economics had supposedly made gold obsolete. But 2008 changed everything. The financial crisis revealed that the entire global banking system was fraud, leverage, and unpayable debt. Lehman Brothers collapsed, Bear Stearns collapsed, AIG collapsed. The world's largest financial institutions would have failed if governments hadn't printed trillions to bail them out. And that's exactly what they did. The Federal Reserve, the European Central Bank, the Bank of England, the Bank of Japan, they all printed money on a scale never seen before. Quantitative easing, they called it. Between 2008 and 2020, central banks created over $25 trillion out of thin air. That's more money created in 12 years than had been created in the previous century combined. And every dollar, euro, yen, and pound created was one more unit of currency backed by nothing, diluting the value of all currency in existence. Central banks outside the Western alliance watched this and understood what it meant. The dollar was being debased, not slowly like in the 1970s, but aggressively and deliberately. And if the dollar collapsed, every nation holding dollar reserves would see their wealth destroyed. So they started buying gold again, not publicly at first, quietly. But starting in 2010, the trend became unmistakable. Central bank gold purchases went from negative, they were net sellers, to massively positive. By 2018, central banks were buying 650 tons per year. By 2022, over 1,100 tons. By 2023, over 1,000 tons again. And the buying is accelerating in 2024 and 2025. This isn't random. This isn't coincidence. This is the largest coordinated movement of wealth into a single asset class in modern history, and it's being driven by fear. Fear that the dollar-based system is ending. Now let's look at who is buying and why. China is the most important player in the new gold war, and they're lying about how much they have. According to official Chinese government reports, China's central bank holds approximately 2,300 tons of gold. That would make them the sixth largest holder after the United States, Germany, Italy, France, and Russia. But no one believes those numbers. Independent analysts estimate China's actual gold reserves are between 10,000 and 30,000 tons. How is that possible? Because China doesn't report all its purchases. The People's Bank of China reports gold purchases monthly, but those reports only include gold added to official reserves. They don't include gold purchased through state-owned enterprises, military channels, or held off balance sheet. China has been accumulating gold through multiple channels for over 20 years, and they've deliberately hidden the true extent of their holdings. Why would China hide its gold reserves? Because if the world knew how much gold China actually held, it would trigger panic. It would signal that China is preparing to challenge the dollar's reserve currency status. It would reveal that China has been quietly positioning itself for a post-dollar world. And it would cause other nations to accelerate their own gold purchases, driving prices higher before China finishes accumulating. China's strategy is clear. They're the world's largest gold producer, mining about 370 tons per year. None of that gold is exported. It all stays in China. They're also the world's largest gold importer, bringing in 1,000 to 2,000 tons per year through Hong Kong and Shanghai. That gold doesn't leave China either. For 2 decades, China has been absorbing every ounce of gold it can produce or import, and it's not going to private citizens buying jewelry. It's going to the central bank and state-controlled entities. The math is simple. If China produces 370 tons per year and imports 1,500 tons per year, that's 1,870 tons entering the country. Over 20 years, that's 37,400 tons. Even accounting for jewelry and industrial use, China should have accumulated at least 20,000 to 25,000 tons by now. Yet they officially report only 2,300 tons. Where's the rest? Hidden, stored in military facilities, central bank vaults, and off-balance sheet accounts that aren't reported to the IMF or the World Gold Council. Russia has been equally aggressive, but more transparent. Russia's central bank has increased gold reserves from 600 tons in 2008 to over 2,300 tons today. That's a nearly four-fold increase in 15 years. And Russia has explicitly stated why. They're de-dollarizing. After the United States imposed financial sanctions following Russia's annexation of Crimea in 2014, Russia decided the dollar was a weapon that could be used against them. So they started dumping dollar reserves and buying gold. Between 2014 and 2021, Russia sold over $100 billion worth of U.S. Treasury bonds and bought gold with the proceeds. When Western nations froze Russia's dollar reserves in 2022 after the Ukraine invasion, Russia's strategy was vindicated. The West proved that dollar reserves aren't safe if you're geopolitically opposed to American interests. Gold, however, can't be frozen. It can't be sanctioned. If you hold physical gold in your own vaults, no one can take it from you. India has also accelerated gold purchases. India's central bank has increased reserves from 560 tons in 2018 to over 800 tons today. India has always had a cultural affinity for gold, but these purchases aren't cultural, they're strategic. India is hedging against dollar instability and preparing for a multipolar currency system where gold plays a central role. Turkey, despite chronic economic problems and inflation, has increased gold reserves from 116 tons in 2017 to over 540 tons today. Poland has increased reserves from 103 tons in 2018 to 359 tons. Even smaller nations like Hungary, Thailand, and the Philippines are buying significant amounts. This is a global phenomenon, and it's accelerating.
But here's what makes this truly alarming. Central banks are buying gold at prices that should discourage buying. Gold hit $2,000 per ounce in 2023 and has stayed elevated. Traditional economic theory says high prices should reduce demand. But central banks are buying more, not less. They're willing to pay record prices because they believe gold will be worth far more when the crisis arrives. Or they believe that having gold at any price is better than holding paper currency that could become worthless. The gold reserves of central banks tell you who's preparing and who's not. The United States officially holds 8,133 tons of gold, the largest holding in the world. That gold is supposedly stored at Fort Knox, West Point, and Federal Reserve vaults. But here's the problem. The gold hasn't been independently audited since 1953. There's no public verification that the gold is actually there. Some analysts believe significant amounts have been leased or sold, but the official numbers remain unchanged. Germany holds 3,355 tons. Italy holds 2,452 tons. France holds 2,437 tons. These are legacy holdings from the Bretton Woods era, when currencies were backed by gold. But these nations aren't buying more. In fact, some European central banks have been selling gold to finance budget deficits. The West is complacent. They still believe in the dollar system. They think the current arrangement is permanent. The East is preparing. China, Russia, and other nations are treating gold as the ultimate reserve asset. They're accumulating as much as they can while prices are still manageable. And they're doing it because they know the dollar system is ending. When you look at the numbers, the shift is undeniable. In 2010, Western central banks held about 70% of all official gold reserves. Today, they hold about 50%, and the percentage is falling. The East is catching up. And when the East collectively holds more gold than the West, the balance of financial power will have shifted permanently. So why are nations buying gold? What do they know that ordinary people don't? The answer is simple. They know the dollar is being destroyed. Since 2008, the United States has added $20 trillion to the national debt. The Federal Reserve has printed trillions. The government runs deficits of $2 trillion per year with no plan to stop. This is unsustainable. The math doesn't work, and everyone who understands finance knows it. But there's a deeper reason. The dollar's dominance has always rested on two pillars. First, the U.S. military, the most powerful military in history, ensures that global trade happens in dollars. Nations that tried to move away from the dollar, like Iraq and Libya, were destroyed. Second, the petrodollar system. Oil is priced in dollars, creating artificial demand. Nations need dollars to buy oil, which forces them to hold dollar reserves. But both pillars are cracking. The petrodollar system is breaking down. Saudi Arabia, which has priced oil in dollars since 1974, is now selling oil to China in yuan. Russia is selling oil to India in rupees. The Gulf states are discussing pricing oil in multiple currencies. If oil is no longer exclusively priced in dollars, the artificial demand for dollars collapses. Nations won't need to hold massive dollar reserves. They'll diversify into other currencies or assets, and the primary asset they're choosing is gold. The military pillar is also weakening. The United States is overstretched. Nearly 700 military bases in over 70 countries. Wars in the Middle East that cost $8 trillion and achieved nothing. Rising challenges from China and Russia that the U.S. can't address simultaneously. The military dominance that enforced dollar hegemony is no longer absolute. Nations can now challenge the dollar without fearing immediate military consequences. And nations are rationally preparing for the post-dollar world. When the dollar loses reserve currency status, it will be the largest wealth transfer in history. Every nation holding dollar reserves will see those reserves lose value, potentially 50 to 70% or more. China holds over $3 trillion in dollar-denominated assets. If the dollar collapses, that wealth evaporates, unless they've hedged with gold. That's what this is really about. Central banks are hedging. They're buying insurance against dollar collapse. And the fact that they're buying in such massive quantities tells you they believe the probability of collapse is high. They're not buying gold because they think it'll go up 10% or 20%. They're buying gold because they think the alternative is losing everything. The timing of the gold purchases is also significant. The acceleration began in 2022, right after the United States froze Russia's dollar reserves. That was a watershed moment. It proved that dollar reserves aren't safe if you're on the wrong side of U.S. foreign policy. Over $300 billion of Russian reserves were frozen with the stroke of a pen. Russia couldn't access its own money because it was held in Western banks and denominated in Western currencies.
Every nation paid attention. China, India, Saudi Arabia, Turkey, Brazil. They all realized that if the U.S. could freeze Russia's reserves, it could freeze theirs. Dollar reserves aren't truly yours if they're held in the American financial system. They're held at the discretion of the U.S. government. And that government has proven it will weaponize the financial system against adversaries. Gold is different. Physical gold stored in your own country can't be frozen. It can't be sanctioned. It can't be seized remotely. It's the only truly sovereign reserve asset, and that's why nations are buying it. They're repatriating financial sovereignty. They're moving wealth out of the dollar system and into an asset that the United States can't control. But there's an even darker dimension to this. Some analysts believe the gold buying isn't just about hedging against the dollar collapse. It's about preparing for a new currency system, a gold-backed currency system. For 50 years, the world has operated on pure fiat currencies. No major currency has been backed by gold since Nixon closed the gold window in 1971. But that system is failing. Inflation, debt, and currency debasement are destroying confidence in fiat money. What if China announces that the yuan is now backed by gold, even partially backed, say 20% or 30%? That would instantly make the yuan more credible than the dollar. It would trigger capital flows out of dollars and into yuan. It would position China as the leader of a new monetary system, and it would require China to have enormous gold reserves to back such a currency, which is exactly what they've been accumulating. Russia has also discussed gold-backed currency. In 2022, the Russian central bank temporarily pegged the ruble to gold at 5,000 rubles per gram. The peg was lifted after a few months, but it demonstrated capability. Russia was showing the world it could back its currency with gold if it chose to. The BRICS nations, Brazil, Russia, India, China, South Africa, and newly added members like Saudi Arabia, UAE, Egypt, Ethiopia, and Iran have discussed creating a BRICS currency. Over 40% of the world's population, over 30% of global GDP, and rapidly growing. If BRICS launches a gold-backed currency, it would be the most significant monetary event since Bretton Woods. This is what the gold war is really about. It's not just about hedging against the dollar. It's about building the foundations of a new monetary system. And the nations buying the most gold are the nations that will have the most power in that new system. The West is asleep. They're still operating as if the Bretton Woods system from 1944 is permanent. They think American dominance is guaranteed. They believe the dollar will remain the reserve currency forever, because it always has been. The East is preparing. They're accumulating gold, building alternative payment systems, and positioning themselves for the transition. When the crisis comes, and it will come, the nations with gold will have options. The nations without it will be at the mercy of whoever controls the new system. And that's why the gold buying is desperate. It's not about investment returns. It's about survival in the coming financial reset. Let's talk about what happens when the dollar loses reserve status. This isn't theoretical. It's happened before. Britain's pound sterling was the world's reserve currency for over 200 years. Then World War II bankrupted Britain. The Bretton Woods Conference in 1944 officially transferred reserve currency status to the dollar. Within a decade, the British Empire collapsed, not because Britain was militarily defeated, but because it lost financial dominance. The same pattern will repeat with the United States. When the dollar loses reserve status, several things happen simultaneously. First, demand for dollars collapses. Currently, nations need to hold dollars for trade, especially oil purchases. When that ends, they'll dump their dollar reserves. Over $7 trillion in dollar reserves held by foreign central banks could flood the market. This would cause a currency crisis. The dollar would lose 40 to 60% of its value, possibly more. Imports would become vastly more expensive, from electronics to clothing to food, because America imports more than it exports. Second, interest rates spike. The U.S. government borrows $2 trillion per year by selling treasury bonds. Foreign buyers, primarily China and Japan, purchase a huge portion of these bonds. When the dollar loses reserve status, foreign demand for treasury bonds evaporates. Who wants to buy bonds denominated in a collapsing currency? To attract buyers, the U.S. government would have to offer higher interest rates, much higher, 10%, 15%, possibly 20% like in the 1980s. But at current debt levels, the government couldn't afford those interest payments. Annual interest costs would exceed $7 trillion, more than total tax revenue. The government would face a choice: default on the debt or print money to pay it. Either choice destroys the currency.
Third, the standard of living collapses. America's lifestyle is subsidized by the dollar's reserve status. We can print money and foreigners accept it because they need dollars. We can run massive trade deficits, importing far more than we export because we pay in dollars that cost us nothing to print. When that ends, real wealth matters, production matters, and America doesn't produce enough to sustain its current consumption. The adjustment would be brutal. It would feel like a third-world economic collapse in the world's richest nation. The gold price would explode. If China backs the yuan with gold, if BRICS launches a gold-backed currency, if the dollar collapses and investors flee to safety, gold could rise to $5,000 per ounce, to $10,000. Some analysts predict $20,000 or higher. Not because gold becomes more valuable, but because currencies become less valuable. Gold is the constant. Currencies are the variable. And when currencies collapse, gold measured in those currencies rises exponentially. This is why central banks are buying now. They're front-running the crisis. They're positioning themselves before the panic starts. When ordinary investors realize what's happening, gold will be unaffordable. It might not even be available. Central banks are buying thousands of tons per year. If retail investors tried to buy even a fraction of that amount, the market couldn't supply it. There isn't enough gold, at least not at current prices. Prices would have to rise dramatically to bring supply and demand into balance. So what does this mean for you? If central banks are desperately accumulating gold, should you? The answer depends on what you believe about the dollar's future. If you believe the dollar will remain the world's reserve currency indefinitely, if you believe the U.S. government will get its debt under control, if you believe the Federal Reserve can manage the economy without destroying the currency, then you don't need gold. You can stay in dollars and dollar-denominated assets. But if you believe the pattern of history, if you recognize that every reserve currency eventually fails, if you understand the math of unpayable debt always ends in currency collapse, then gold is insurance. It's the asset that has survived every currency collapse in history. It's the asset that central banks turn to when they lose faith in paper money. And right now, central banks are buying gold faster than at any time in 55 years. That's not a coincidence, that's a signal. The new gold war is a race to accumulate the asset that will matter most when the current system fails. The nations buying gold are preparing for a post-dollar world. The nations not buying gold are assuming the dollar system is permanent. History will prove one side right and the other side catastrophically wrong, and the difference will be measured in trillions of dollars of wealth preserved or destroyed. This isn't about making money, this is about not losing everything. Central banks understand that. They're buying gold not for profit, but for survival, for maintaining sovereignty when the financial system resets, for having options when the dollar-based order collapses. The question is whether individuals understand it too, whether they'll recognize the signal that central banks are sending, that the largest, most informed financial institutions in the world are fleeing paper and accumulating metal, not because they're old-fashioned, but because they're preparing for what's coming. The gold war is real. It's happening now. And when it's over, the nations with gold will write the rules for the next financial system. The nations without it will have no choice but to accept whatever terms they're given. That's why it's desperate. That's why it's accelerating. And that's why you should pay attention. Because when central banks panic buy gold, it means they know something the rest of us are just beginning to understand. The current system is ending, and the new one will be built on gold, just like every monetary system before paper money took over. History is repeating. The only question is whether you'll be prepared when it does.